Good day all, Anish from BlackBull Markets here. Today all focus is on the FOMC meeting headed by Fed Chair Jerome Powell. It is indeed the last meeting until the election in November, so very key in terms of idealization of how well the US economy is performing currently and the expectations for the future post-pandemic or into a recovery zone. Now, interest rates are at rock bottom. There is no expectation for those to change. What's a positive factor for the Fed and possible light for optimism is that unemployment is at 8.4%. So expectations of that single-digit unemployment level have been achieved, which is fantastic for the Federal Reserve and may actually bring in light a hike in interest rates sooner than other analysts have expected, which perhaps could be a volatile sign for the market. However, a lot of expectation is for interest rates or for interest rates to remain low for the next 1 or 2 years as Federal Reserve look to gain full employment, full focus on that, regardless of that inflation creeping up and also debt creeping up. So no expected change, of course, for economic stimulus as well. So things generally remaining the same. Focus will be on whether we get any information as to how soon interest rates will change. The whole negative rates situation has been kind of thrown off the table by a lot of the Fed staff, so may not see that come into the picture. But what we could see is another leg up higher in the stock markets as equity continues to flow into the markets. Of course, we test that all-important 50-day moving average on the S&P 500. Key line trending indicator, of course, showing that there is interest and continued interest for investors to buy on pullbacks. Continuation of that trend is shown this week. Markets higher. 3421 is the current print. It is at a key resistance level where we've seen the price struggle to breach over the last week. However, if the Fed stimulates this move higher, we could see 3500 again on the chart, and then of course those all-time highs to the top just above that 3550 mark on the S&P 500. Similar pattern across US stocks, Nasdaq and the Dow Jones all up today in the futures market ahead of this key FOMC meeting. So do keep your eyes on the stock markets especially. We are looking at a potential continuation in this trend. Dollar is very vulnerable to the downside, and again, if there is no change in rates, it just gives investors another opportunity to invest back into the stock market. So if you're looking for any support areas to the downside, have a look at 3300 mark. That's around about where the 50-day moving average sits on the S&P 500. So that's a simple moving average. You can draw it on your charts on the S&P 500 as well as other assets, but it's really nice on this SPX. A lot of investors are looking at that. So near term, potential higher moves in the stock markets over the medium to long term, given interest rate hikes or any signs of interest rate hikes, these stock markets do remain vulnerable to the downside. But whichever way you're going, do trade safe. Also, do keep your eyes on the hedges in terms of gold, Swiss franc, Japanese yen. All interesting pairs should we get any exciting news from the Federal Reserve or anything out of the blue. So, trade safe, trade consciously, trade accordingly. All the best.